rates, lower data, lower inflation. Is the market cracking? Are rates finally changing? I don't know. Doge is signaling all this waste, all this fraud, all this abuse, all this government spending. I've been preaching on my soapbox for many, many years now, saying the government is propping up this economy. I think we're now realizing that there's been 500 billion, 1 trillion, whatever the money is, of money that's been circling around the economy that probably should not be there. Pre-pandemic, we used to bring in 5 trillion, spend 5 trillion. All of a sudden, we started spending 2 trillion more. We are all starting to realize where did all that money come from? Whether you like the administration, don't like the administration, don't like Doge, you cannot deny that government spending is out of control. You cannot deny that the government is super efficient. And you also cannot deny that the data, interest rates, affordability, housing, and all that stuff has been heavily impacted because of inflation, because of higher interest rates. All that stuff is crushing the housing market. Because think about it. If we find out that $1 trillion or more has been put into the economy year after year, and this is what's propping up your egg price, your gas price, the food cost just to live and survive. You guys know, you go out and eat. It's a ripoff. It's expensive. It's like, this is insane. I was looking at the data for rents, how much rents have gone up. I know, it's insane. Look how much housing has gone up. It's insane, folks. But today, I wanted to jump in because what I'm noticing are some cracks. What I'm noticing are some changes. And if you go back and listen to the Fed officials, I posted a little clip of Neil Kashkari where he talked about that the last couple of years, every Q1, there was more inflation was hotter. The unemployment rate was lower. The numbers of new jobs was like higher than expected, and rates tend to, kind of drop, then go back up. But then after the first quarter, we saw a decline in the data, and then it would spike back up. So the Feds right now currently that are, the Feds, remember, they can cut the rates, they can raise the rates, whatever they say really matters. They are really focused on Q1 because it has spiked. But what we're noticing is that obviously the jobs market is just not there. We're obviously noticing that PCE that's supposed to come out again this week looks like it's going to come in later. What we're noticing is that retail sales fell off. What we're noticing is that the consumer is definitely feeling choked. It almost went 4 months where this 10-year treasury was hovering in the 4.4 to 4.5s. And remember, spiked back up. However, I was talking to a client yesterday and I was just saying is, however we get there, everybody knows whether it's residential or commercial, interest rates need to come down. They cannot sit at these levels. And I keep having this conversation with the average person to somebody that owns a ton of real estate. One or two things has to happen, and it's going to happen sooner or later. Either prices have to come down, which guess what? Let's just pause and talk about that. We don't want prices come down, do you? You that own a home, you're like, no, I don't want that. No, I don't want my house to come down maybe 10, 15, 20%. It's happened in certain markets. There's still markets like San Francisco that are just bidding wars and out of control. There's just so much money up there from why? I tell people, I don't understand it, Kenny. How can San Francisco just be going crazy? Because there's crazy amount of money. There's crazy jobs. People have insane salaries. People have insane RSUs. You don't know what an RSU is? You should look it up. An RSU equals AKA stocks. So they work at a company for 5, 10 years, 3 years, 4 years, whatever it is. They have $1 million. They've got $2 million. They got $3 million in stock. They go cash out that stock, get $1 million in their pocket. What do? They go buy a house with that nice salary they have. So there's all these markets are different. So we cannot look in some. But what I'm saying is, if you look at commercial here in San Diego, the prices haven't really come down. The interest rates haven't come down. So eventually something gives. And what would give is because a lot of people are on adjustable rate mortgages with commercial. So what's going to come up here? A lot of people refinance in 21, 22. So what you're going to have, if those rates do not come down in the 5s to get things going, you will then have a problem with housing. But at the end of the day, we're in real estate. And if you're watching this video, you might be in real estate. If you're watching this video, you might need to buy, you might need to refi. And you might just want to know, Kenny, what in the hell is going on? This is crazy. And at the end of the day, what we care about in real estate is getting rates down, because as of right now, it helps affordability. And people that are sitting there stuck in 1s and 2s and 3s and 4% rates, they don't want to do anything. And the people that thought they were going to go and sell the house to go to buy a bigger home, a move-up home, a lot of them, that dream has passed. Not because of interest rates are high. It's because they bought a house for $750. Now it's worth $1 million. And then the house that they wanted to buy that might have been worth $1 million could be worth $1.5 million. And they're like, that just doesn't make sense. Because their house they bought $750, they just thought the next house was going to be $1 million. And so the payment when they bought a house at $750, and let's say they put 20% down and their nice payment all in is $3,000, maybe less. And they're talking about, now I'm going to buy this house where the taxes, the insurance, the maintenance is higher, and not to mention the payment. Look, don't get me wrong. Even if the rates went back down to 3% and that person could buy a $1.5 million house, they still realize their tax, insurance, and maintenance would go up, and they have been their life at $3,000 just makes sense. They don't want to go to $6,000 or $7,000. They don't want to pay that much more. And so if rates came to 3%, the house that they want would not be 1.5 anyways. It'd probably be 1.7, 1.8. And so the numbers I'm giving you there could be even more exaggerated. The house they bought for $750 is now worth 1.2, and the house they wanted that was going to be worth 1.2 is now 1.8, 1.9, and they're like, that is insane. I am not going to spend that much on a house. Something would crack, something would break just to get the rates down, affordability, but they can't wait anymore. They're outgrowing their house. They've had more kids, and this is the thing about housing, which is what many of us forget, is housing is a place where we live. Housing is a place where we put our heads. Housing is a place that we make dreams, that we make memories, and it's more of an emotional place. It's not an investment. It really isn't. It's a liability because every month you have to pay for it. An investment, the beautiful thing is it pays you, somebody else pays for it, and it should have a return on money. And if it's not, usually it's not a good investment unless long-term. So as I look at the 10-year treasury right now, it's at 4.319. It makes me smile because did we crack something? Are we finally moving in the right direction? But here's the deal. The thing with data can change on a dime. But the interesting about the data, it's tend to get worse as the year goes on. So the Q1, better data, and it tends to get worse. There might be some bumps and stuff, but that's kind of how it's happening. My prediction is by the time we get through this data, and if the government truly wants to get serious about avoiding a Great Depression in the future, because if you guys think that's a joke, it's not. It will happen. I don't think people really pay attention, understand in about 8 to 10 years from now, what's all going to happen with Social Security, with Medicare, how we run out of that money. And then now the money that we have in place that we're spending, we have to go and get more. And so if we are in an economy that's a full economy, full employment, and we're getting $5 trillion of income into the government and we're spending $7 trillion, what happens when the 5 trillion goes to 4 trillion because we have a recession? What happens when the Social Security runs out of money? And all these things matter, folks, is because this is going to matter for the rates, for your retirement, for your house equity and all that. And at the end of the day, we need to, and let's take it home, we need to watch our spending, watch our debt. And at the government, we need to watch our spending and watch our debt. And at the end of the day, the government is the government, but it also needs to be run like a business. Because the government spending, because of all the wastefulness, because of all this excess money that you and I know, whether you like it or don't like it, we know it's very simple. If you take in 5 trillion and you spend 7 trillion, we are spending money we don't have. And you do know that the excess money, whatever it is, wherever it's going, a lot of it is landing into a consumer's hand and it's going into the economy. That's why housing is higher. That's why interest rates are higher, because we are giving out money that we don't have. So if you cut that, you will have more of a balanced market. And people freak out, go, oh my gosh, well, what's going to happen if you cut all this spending? Could we have a recession? Sure. But one thing nobody is really talking about is the private sector is the one that's supposed to create the jobs. That's supposed to put money into people's hands by them working. You know, working, that 4-letter word, work. That's how we make money. That's how we pay for stuff here in the US. So I think we've gotten away from that. and we've gotten lazy and we said, let's just send money to everybody, and it's still happening. But what's not good is you that are trying to refi, you that are trying to buy a house, you trying to invest, you trying to start a business, right? Buy things, and you're noticing like the rates are high. I would honestly blame the government, because the government now, we truly know, has been the spender. When we look at the money, just Doge announcing this and this, I don't need to see all the evidence. It's clear that I didn't know where the money was going because I don't have a tracker, but clearly we know now the money was going to people's hands. It was enough of it. And so when you cut that out, you're going to deregulate, let the private sector come in, create jobs, create businesses, create the marketplace, and let them do their thing, right? Just like a business does. A business thrives, people make money, people get bonuses, commissions, overtime, and they can go spend that in the economy. And that's what we really need. So it's very hard to dictate rates. It's really hard to figure things out when we have all this overspending of money. So I welcome lower rates. It seems like inflation's cooling. It seems like the job market's cooling. It seems like the government is starting to realize, and all of us, how much wasteful spending there is. And so at the end of the day, is this going to be the beginning of rates starting to come down? And folks, when I say rates come down, I am not talking about 3 or 4% rates. I'm talking that we need to get a conventional mortgage with 0 points somewhere in the 5s. If we can achieve that, that will move things in the real estate market. That will help people refi and save money. That will help buyers with affordability. That will help commercial real estate, which we want, not go in a depression, which it's already in, not fall off a cliff and have a total meltdown. Because if commercial real estate goes into a total meltdown, has issues, it will trickle to the rest of the economy. It will probably affect housing. And so we do not want a meltdown. We do not want carnage. We do not like a 2008, because that is a total disaster and a nightmare. What we want is just to bring interest rates down. What we really want is we want the government to quit putting money in the economy that props everything up that you and I deal with on a daily basis, and just not do that anymore, because that doesn't work. And if you go back to 2019 and before, as you noticed, inflation, it wasn't out of control. This is crazy. I feel it, I see it, and I know you do too. So I wanted to make this quick video. I truly believe that we are starting to see some data that's starting to reflect things are definitely coming down. It's so much better. So thank you for listening. Share this video with somebody. I hope to give you better news as these weeks and days go on, because everybody I talk to wants to know about rates. So I wanted to give you my quick video on rates. I wanted to quick video on the breakdown, because look, all these things that are going on right now in the economy, they truly are going to affect you and I in the real estate market. And a lot of people that own houses where they need to refi, buy, or a lot of people that need to go buy a bigger house and they just can't because they're not going to with these rates. I hope relief's on the way. I hope the data is signaling that, hey, we're on our way there. So anyways, thanks for watching. Share us with somebody, and we'll talk soon.